Hi everyone, this is David Malthouse from First Intuition, and this is a special AAT Level 4 video that I'm actually recording for you on Bank Holiday Friday. I know some of you attended my my 1 hour revision session on Tuesday earlier this week on decision and controls, and I know there are lots of you that couldn't make it because you had other commitments, but you were registered to attend. There was a slight problem with the recording of the video on Tuesday, so as a result there's been a delay in being able to get it out to you. So what I'm doing right now is I am recording this video to go through the things that we talked about on the webinar on Tuesday. So hopefully, whether you were here or whether you weren't here on Tuesday, hopefully we should find this useful, and hopefully it's going to give you a few tips and just give you a taste of what we looked at last time. So for those of you that haven't attended one of my sessions before and are kind of wondering what things are all about, I'm just going to give you a brief overview of what we're going to be doing every Tuesday and how these sessions operate. So this is for AAT Level 4 for decision and controls, and every week I will be here, okay, and I'll be here on a Tuesday, and I'm yours between 7 p.m. and 8 p.m. So I'm here. If you've got questions specifically about decision and controls, feel free to bring them along with you, type them in the chat box. If we can answer them during the session, we will do. We do tend to run for the full hour, so it may be the case that if you put that question there, it's something that forms the basis of a future revision session. And what I intend to do every Tuesday is I am going to go through a single question with you. So it'll be an exam standard question. It may be from a past exam, it may be one of the sample assessments, it may be something that we've created, or it could be something from a previous AAT syllabus where the syllabus content is the same as the content that you will be studying for. So we're going to run through that question. Okay, I use that question as a teaching aid. So for some of you, if you haven't seen the question, it doesn't matter. I'll be going through step by step, and I'll be showing you some of the techniques that you need for this exam. For some of you, I know you're ready for the exam. You're very frustrated the exams aren't running, and so for you guys, it's just really to keep your knowledge ticking over. Once we've gone through that question, the intention is every week a video is sent out. So we record the sessions that are there. So if you do attend these sessions and you don't want your name to be public and you're putting things in the chat box and things like that, then feel free to use kind of like an abbreviation of your name or something like that. If you do change your name, that's absolutely fine. You can call yourself kind of whatever you want in the forum, as long as it's not offensive in any way. So if you want to just call yourselves like Mr. A or Mrs. B, that's absolutely fine, or go by your full name, first name, surname, whatever, absolutely fine. So I'll send the video out, and accompanying that video there will be a document. Now that document is going to be next week's question. Okay, so next week's question will be sent out. So anyone that wants to get ahead, you can attempt that question, and you can use these sessions almost as a kind of a guided marking session to see how well did I do, what did I miss out on, how would I improve the question next time. Or what you could do is you can say, all right, well, I know next week we're going to look at, say, variances. Then that means I'm going to review variances ready for Tuesday. So I'm a little bit ahead of the game, and that can really help me kind of hone my knowledge. So there's lots of reasons you can do it. Or if you want to, just print it out. And you can have it alongside you if you're watching this on your mobile phone or something like that. So, I'm just going to give you a little bit of a heads up about what's coming up over the next week. So now that's the general process. Okay, so we'll do a question, I'll email you a video, there'll be a document attached to it, and then we'll be back again next Tuesday, and the whole thing goes round and round and round again. Any questions that you have, put them in the chat. Any questions that you've got between sessions, feel free to drop me an email. If the question is specifically about a question that you're going through, I may not have time to go through every single question that comes in. We have got about 120 people that are registered for these sessions, and if we get 120 questions over the course of kind of like a single day, I'm not going to be able to get through all of them. Okay, if it is a question about kind of registration for these sessions, things like that, I should be able to address those kind of things. So for those of you that were with me on Tuesday, okay, the question we went through Okay, it was a question that involved a little bit of kind of ratios, and it was a written question. And written questions are the questions that we know students, one, don't particularly like, secondly, don't perform quite as well on as the purely calculation-based questions. And we also know that they're the questions that the AAT really value. And they're the things that the AAT believe, and I believe this, that as accountants, this is where we add value to a business. A lot of the things that we do in terms of calculations, a spreadsheet will do for us, or accounting software does for us. But what accounting software and what spreadsheets can't do is they can't take complex financial information and they can't explain it to a board of directors, and they can't make people understand what the finances are telling them. That's the real skill of what we bring to a business as qualified accountants. Okay, so as a level 4 AAT qualified accountant, we're expected to be able to bring that knowledge to the businesses that we work for. Okay, so the question that we were looking at is this question here. Okay, so it says question 10. It comes from an old AAT exam, so you can see it's in AAT colours, and I'm gonna keep flicking backwards and forwards to this question, to the workings that I'm going to go through. And I know those of you that were here, on Tuesday when this was live, kind of you saw me go through it step by step by step. Okay, there may well be some little shortcuts that I take today. Okay, because just to kind of like cover a little bit of extra material. So first step, we've got a question. We know it's written. At the top of the question, it says what's going for this. Okay, so first we're thinking loads and loads of credit, and we know the written questions carry, a heavy mark allocation compared to the questions. A lot of marks going for the written elements, and at the top of the question, it gives us, this little bit here. You've been provided with the information for Alpha Limited. Okay, so we know that this company, Alpha Limited, well, that's the company that we have to deal with. That's the company that we're managing. Once I've read that, and I know, the company's there, it doesn't tell me any information about who I am, who the business is, what the business does. It's got a load of financials, a couple of things about current position, proposed position. Down the bottom page, loads and loads of financial data, and then over the page, that's our requirement. And I always spend time on the requirement. Okay, I think the requirement is the most important part of the question. It's the bit that if you're going to spend extra time anywhere in the exam, spend it reading the requirement. And if you need to read this requirement 2 or 3 times, I really don't have a problem with that. And one of the first things that I look at, and this is a kind of a little tip that I've got. It's the first of my tips today to help you to kind of make written questions easier. Because when I was studying, I hated written questions, because I would see something that would say 22 marks, and I think, oh my God, that's an essay. I've got to write page after page after page of essay to try and get 22 marks. But then what I learned as I studied more and more is I learned how to read a question. And here we can see that we've got 2 parts. It says, what do we need to write a report on? An explanation of why the gross profit for the proposed solution is higher than the current position, referring to the following: sales volume, material cost, labour cost, fixed production cost. We've got to talk about all 4 of those things. And then part B, an explanation of what is likely to happen to the current asset position of the business by considering the following inventory levels and trade receivables levels. Now I can see, looking at that, that's a total of 6 different topics that they want me to talk about. 6 different things that I've got to talk about during this question. Now, 22 marks looks hard, but now we're saying that 22 marks is going to be shared between 6 different elements of the question. And what's that? That's what it's just under 4 marks for every individual point that I need to, for each point I need to talk about. So, that is 4 marks per element of the question. Now, can I write for 4 marks? Well, if I write a good, well-explained sentence, that's got to be worth a mark. If I do a calculation, that's got to be worth at least a mark, maybe 2 marks. So if I'm doing a calculation and writing 2 sentences about each of those things, that's 4 marks. Can I do that for each of those different elements? Okay, well, suddenly it doesn't seem quite so difficult. Suddenly 22 marks, which sounded horrible, is now broken down into 6 manageable little chunks. So first thing, always read that requirement and try and use it to break down the mark allocation to make the marks just easier, more manageable bits of information. Okay. The next thing that I look at is, what do I know about here, and are there any tricks? Okay, so what do I know about? An explanation of why the gross profit margin is higher than the current position. Okay, and then it says sales volume, material costs, labor costs, fixed production costs. Okay, well, what do I know there? Well, I know about gross profit margin. Okay, I know that if I look at my gross profit margin, okay, actually let me write it in full. Gross profit margin. Okay, I know how to calculate it. I know gross profit margin is usually sales, and let's just play with some numbers here. Okay, so these aren't numbers from the question, they're just numbers I'm making up. If I've got a sales figure of £100, and then I deduct from that sales figure what cost of sales. Okay, so if I'm running a shop and I sell £100 worth of stuff, and then the cost to buy in all of that stuff was, say, £60, well, that gives me a gross profit of £40. Okay, so I know how to calculate gross profit, and then to calculate the margin, well, margin is just profit divided by sales, so that's just 40%. Now, that's why I know how to calculate gross profit margin. Now, one of the things that I'm always conscious of, and I always think, when I think gross profit, I think there's a trick here. And whenever the AAT asks you about changes in gross profit, okay, there's always a trick in terms of, well, what could increase our gross profit margin? How could our gross profit margin percentage increase? And what people always think straight away, this is kind of like the trick that they want you to fall into. Okay, and the trick that they want you to fall into is saying, well, you can improve your margin by selling more. Now, if we sell more, and let's say we double our sales. So if we double our sales and we now sell £200 worth of stuff in our shop, well, the cost of sales is going to double as well, because you're going to need to buy twice as many things. So not 60, it's going to double to £120, which means my gross profit is going to be £80. Okay, now, what does that mean for my margin? Well, 80 over 200, my margin is still 40%. My margin isn't changed. Okay, so the trick that we've got here is that if your sales are increasing, that I wouldn't expect your gross margin to be increasing as well. I'd expect your margin to be staying the same. Okay, so what lots of people will think is, oh, your margin's gone up, that must be because you sold more. Okay, no, not at all. Okay, what could make our gross margin increase is, well, if our price increases. If my sales price goes up, my margin will go up. If I'm charging £110 for the same stuff and the cost of sales is still 60, my margin will go up. Or my cost of sales reduces per unit. So if I can reduce my cost of sales, so if I can still sell £100, but I can negotiate with my suppliers and get a better deal, that's going to bring my cost of sales down. Okay, so that's the trick just to watch out for. Okay, now the trick is that, as I say, that if, I'm just going to make a little note here. If your sales volume increases and all cost of sales are variable, then your margin stays the same. So that's the trick that I watch out for. Okay. My next step after that is then going to be to look at this narrative. Okay, with all of that in mind, look at the narrative, and then I'm going to start presenting and answering my question. Okay, so in terms of how I attack a question, okay, so we had kind of like the first step that I had was read the requirement. Okay, so the first thing I did was read the requirements. Okay, and I break it down. That's number one. Number two, I then ask, what do I know? What do I know? I knew about gross margin. Okay, so I made a few notes on it. It might be you just do that in your head. And you think, right, I know about gross margin. I know about return on capital employed. I know about a material price variance. Okay, so what do I know? Then I ask myself, are there any tricks? Are there any tricks in this question? Is there anything that the examiner is kind of making me think about or leading me towards that actually I need to be really careful of? And here we need to be careful with gross margin, because we know gross margin, okay, is something that isn't changed by increases in volume if all of my costs are variable. If some of my costs are fixed, there's a bit of a difference there. Next thing that I do, once I've noted that, is I look at the narrative in the question. Okay, and I suppose, and the numbers as well in this case. Okay, so look at the narrative, look at the numbers. And then my final thing is I answer the question. Okay, that's me done. So that's the 5 steps I would look at. Read the requirement. What do I already know? Okay, so what knowledge do I already have? Are there any tricks I need to be aware of? Read the narrative, present your answer to the question. Okay, and that's always the methodology that I go through. If you kind of go the other way and say, right, first of all, I'm going to read the narrative. Okay, so I read through the narrative. I've got this lovely story about this business. Then I read the requirement and say, this is what I need to do. And it's like, oh, well, yeah, I forgot to look at that part. I forgot to look at sales. I forgot to recognize what was going on with gross margin. Now I need to read the narrative a second time, because now I understand what I've got to do. Always best to read the requirement first. Okay, think about what you know before you start writing, because you might start writing something and then suddenly realize, oh, actually, yeah, that thing about gross margin, I really should have thought about that to start with. Now I need to go back and adjust my answer. So make sure it's a nice logical approach to our question. Then we go back. So where were we? We had read the requirement. We wrote down the things that we knew. We said, are there any tricks? Then we look at the narrative. Okay, so our narrative says, so remember the requirement again, an explanation as to why gross profit margin is higher than the current position, referring to the following: sales volume, material cost, labor cost, fixed production cost. So if I look at that first page, so we've got this current position where we currently charge £22 and we currently have 150,000 people wanting to buy our products. Advertising costs are £500,000 a year. Factory can produce a maximum of 400,000 units. So we've got loads of capacity. We've got, factory's not even at half capacity. We could produce loads more stuff. The only variable costs are labour and material. Okay, that makes sense. Labour, we pay people to do work. The more work we have, the more we pay them. And material costs, well, I'm only going to buy in materials to actually manufacture stuff. I'm not going to buy in excess material. Our proposal is that we're going to reduce our price to £18 per unit. Okay, well, first thing I'm thinking here is it's going to have a negative impact on my margin, because if I sell for £18 and the cost of sales are still the same, it's going to reduce my profit margin. Okay, so that's not a good thing at the moment. That's not explaining a rise. Okay, that's actually a fall. Advertising costs will increase to 750,000. So we're going to be spending more money to advertise the product that's cheaper. Okay, but there we go. That's the reason we're doing it. Sales are going to go up to 300,000. So we could drop price, a bit more advertising, and we double our sales. Okay, now factory capacity still 400,000. We've still got enough capacity, so we're not going to say, oh, we can't make, we can't meet demand. We've still got excess capacity, and again, labour and material are the only variable costs. So we know this is our proposal, and then here is our forecast financial statements. So we're forecasting what the We've got current position versus the forecast sales price. We've got volumes doubling. Then we've got our revenue. So revenue would just be sales price multiplied by sales volume. And then we've got direct materials, direct labour, fixed production overheads. And we've now got our total cost of sales figure. Now, the interesting thing here, and remember I said before that margin is not changed by an increase in sales volume, okay, as long as, okay, the sales price and variable cost, as long as variable costs are all variable and we're not changing any of those things. Okay, well, here we've got a fixed cost, which is sitting under cost of sales. Okay, so that's really interesting to me, okay, because it's slightly different to the kind of things that we normally see. I've then got a calculated gross profit, so we can see gross profit has gone up. We've got fixed advertising costs, admin costs to get a profit, a net profit figure. They've then done some work here and they've worked out material costs per product, labour costs per product, fixed costs per product, and they've also done an advertising cost. And there we've got the gross margin has gone from 31.82 to 33.33. We've got a net margin, we've got an inventory figure, and we've got a trade receivables figure. Okay, so we've got a fair amount of information in terms of P&L. We've got differences in information. I love the fact they've done these calculations for us. Okay, I can see that the cost per unit's down slightly. I can see the labour is the same. I can also see the fixed production costs are down slightly. We know what's going on with sales. The question tells us, can we write a report with an explanation as to why the gross profit margin is higher than the current position, referring to sales volume, material costs, labour costs, fixed production costs? Okay, so in our exam, we know it's going to be computer-based. We're going to be typing into the software, and they're likely to give us a structure to follow, so boxes to fill in, things like that. So we're likely to be given details of that you've got to write a report, and we really focus on the narrative of that report. Now, the first thing is, and I always get the question, should I write an introduction? Should I write an introduction? Am I going to get credit for it? And my thoughts are that you may not get direct marks or direct credit for writing an introduction. So the markers might say, oh, there's nothing in the mark guide for them. They haven't been asked to do an introduction. But what it does do is, if you're reading someone's work, and whoever marks your work, they haven't seen the rest of your exam, they've just looked at that question. And as they read through the question, what they want to know is, do I think this person really understands the topic? Okay, do I think they've really got under the skin of this question, and they really understand it, and they give me really good value? If you write a little introduction to begin with, like, a sentence, maybe 2 sentences, well, there could be marks for it, but even if there aren't marks for it, what you're doing is you're giving the reader the sense that you really understand this question. So I would do a little introduction sentence, not much more than a sentence really. Okay, so my first thing is, I would say, well, what's going on here? So under the new proposal, Alpha Limited's gross profit margin is, remember, this is a forecast, so it's forecast to improve from a current level of 31.82% to, I'm going to write a word I don't normally like writing here, to a higher level of 33.33%. Okay, simple sentence. Okay, now what this is telling me now as a marker is, I've read the question. Okay, the fact you're using the word Alpha Limited to start with means you must have read the question to understand that this is a company called Alpha Limited. Okay, so brilliant. You're not just regurgitating a textbook that you've read. You're actually reading this question, taking an interest in it. Okay, now this word here is the word I like to see. I like to see words like improve, words like deteriorated. The reason I like that is that because that tells the examiner that you know something is good or bad. Okay, now in the question they say that it's got higher. Okay, but is something getting higher a good or a bad thing? Okay, and that's the question that I pose quite a lot: is higher good or bad? Okay, because higher sometimes could be good, higher sometimes could be bad. Higher sales sounds good, higher costs, that sounds bad. So say something is higher, it doesn't tell me whether you've understood it's good or bad from the business perspective. And the example I always give is your bank balance. My bank balance is higher. Okay, is that good or bad? Okay, well, if you've got money in your current account and the balance is higher, that's good. If you've got an overdraft and your overdraft is higher, well, that's a bad thing. So just by saying something is higher, bigger, okay, doesn't mean that you understand it. Saying something is improved or deteriorated, that tells me you really do understand what's going on here, which is why I like that word improve there. So I'm reading it, I'm thinking, right, I'm confident now, you know that a higher gross profit margin is an improvement, it's a good thing. Okay, whereas if you just say, oh, it is higher, it's higher because, you're not telling me you understand that's a good or bad thing for your business. Okay, so I'm now questioning whether you know whether it's good or bad. Okay, but I'm not questioning it now because you've told me it's improved. And then you need to set up for the rest of the question. So I would then say, wrong color. This improvement can be explained by a number of factors. And now we're set up for the question. Okay, this improvement can be explained by, there we go, by a number of factors, and we start then using the headings from the question. Okay, and I would try and use headings wherever possible. So number one, this can be explained by sales volume, or can it? Okay, so things to watch out for. If you ask to comment on something and the question says, can you refer to the following sales volume? We're writing a report, an explanation of why the gross profit margin is higher. Okay, well, actually do a bit of explanation. Okay, and one of the things loads of people miss out on is loads of people will just say, oh, sales volume doesn't have an impact on margin. Okay, well, that's not really much of an explanation. You're not really giving much value to a reader, to a manager, to whoever's looking at these finances. So I would say Alpha Limited is forecast to improve sales volumes from 150,000 to 300,000 units. I would then say, ordinarily, this would not have an impact on gross profit margin. Okay, so I'm telling the examiner, I've noticed that the sales volume's gone up. I've noticed it's gone up from 150 to 300,000, and ordinarily that's not going to have much of an impact on my sales volume, or sorry, on my profit margin. So, I'm not huge. I'm not really thinking this is having much impact on my margin. But what I do know from those sales is I do know that, yeah, we sold more, but to do it, we had to drop our sales price. So I think I should mention that. So, I will say here, however, to achieve this improvement, So remember, I'm saying improve because selling more stuff is good. I'm recognizing that selling more things is a good thing. Okay, I'm not saying increase because that could be taken, you know, as do you understand what's going on? So to achieve this improvement in sales, Alpha Limited is proposing, okay, remember, it's a proposal, a reduction in sales price from £22 to £18 per unit. This reduction in price would have the effect of reducing our margin. Okay. So I've gone through everything to do with my sales volume. And now it would be very, very easy for people in this exam just to say, oh, sales volume's got no impact. So I'm just going to say, so sales volume doesn't have any effect, move on. Okay, you may get a mark for a bit of knowledge, okay, for understanding that that's generally what happens. But you haven't given me any explanation of the figures. You haven't really explained what's going on. You haven't recognised that there's that fall in sales value, okay, which doesn't have a negative impact. You haven't showed me you've actually read the numbers, okay, and it's something the examiner wants to see is, have you read and understood the numbers? Now, I think what I've got there is I've got two separate little paragraphs. Each paragraph is at least 2 sentences long. Each of those sentences has got reference to the numbers in it. Now, I would be absolutely shocked if a marker looks at that and they're not thinking, oh, there's easily got 4 marks there. I'm thinking 4 or 5 marks worth of work comes out there. We're looking for 22. I said 4 marks for individual points. We've easily done it with sales volume. Okay, now some of them are going to be more difficult to explain, may not carry quite as many marks, but we've got a good number of marks in the bank already. So what's the next thing? Well, the next thing is material costs. Okay, so I'm going to start on another page, but you guys would just do it later down. We've got material, and was it material price? Material costs, sorry. So just watch out again for making sure you try and use the same kind of language that the examiner uses. So material cost, again, be really careful here. There's so much we could say, okay, but lots of people aren't going to say half of the things that we could say. So what do we know with material cost? If we look in here, we know that material costs are a variable cost, and down here you've got this material cost has dropped from £5 per product to £4 per product. We know that reducing the variable cost, okay, is going to improve our margin. More of our sales are left over, more of our sales per unit are left over as profit. That's going to increase margin. So we need to tell the examiner we understand that. Okay, so what's going on? The material cost per unit is forecast to fall by £1. That's not £1, is it? It's £2. No, it is £1. Yep, fall by £1 from £5 now to £4 under the new proposal. I would then say this cost saving will improve the gross profit margin. Okay, so what all I've done there is I've kind of stated the obvious. I said, this is what's going on right now. Okay, so this is what's going on, and this is the impact that it will have on my gross margin. Okay, there's no kind of nothing hugely complicated or hugely difficult that I've done. I've just said this is the current state of affairs. Okay, and I'll get a mark there for recognizing what's happening. I'll get a mark there for recognizing the impact that it's having on gross margin. Okay, so it's going to be improving my gross margin. Now, where I can get extra marks is by really shining a light on what's happening, or giving an idea about what's going on. How can this happen? Okay, so this is where you can start using a bit of your kind of business acumen to say, well, what might be going on here? And I would be talking about, so this cost saving. So this cost saving may be achieved because we will be producing more products, and we can achieve bulk discounts from suppliers. Okay, so now I've said, right, why could this have happened? Well, if I'm selling more stuff, selling twice as many things, I'm definitely going to go to my suppliers and say, look, I'm producing so much more than I was before. You're going to have to give me a discount, okay? Because otherwise I'll go somewhere else, or I'll be ordering massive bulk amounts, okay, because you're only going to have to deliver to me once this huge amount, okay, you can afford to give me a discount. Okay, so that's the added bit of flavor that I give my answers, that now starts the examiner to think, right, this person really knows what they're talking about. Okay, this person really understands what's going on in this scenario. They can see the fact volumes are going up and we may be able to negotiate discounts. They give me a really good explanation as to why this might have happened. So it changes quite a straightforward answer in terms of this is what's going on, this is the effect, this is also why it might happen. And that's where we get real value as accountants, by trying to do that bit of extra investigation as to what's going on. So that's my material cost. So if we go back to my task, we are explaining the change because of sales volume, material costs, labor costs. And I think we've got really, really good marks so far. And what we've done so far is, we've achieved some really good marks for sales volume, really good marks for material costs. We've got labor costs, we've got fixed production costs. And I tend to think whenever you've got a series of things to talk about, some of them you're going to be able to get really good marks for, but some of them there isn't going to be as much to say. Okay, and I think that for labor cost, there's a little bit less to talk about than the other costs that are there. Okay, so now I just need to plug in my computer. I'm just running a little bit low battery. Hi there, welcome back. This is part 2 of our Bank Holiday Friday webinar. When I went to plug in my my computer because it was running out of battery, the whole system just appeared to completely crash around me, and we just had a whole house full of kids screaming that Fortnite's cut off and they can't play their computer games. So thankfully we're back up and running. Where I left you last time is we were putting together this this report. We've done the first 2 elements, sales volume and material costs, and I said that those 2 are the things that I think that we could say quite a lot about. And then we had 2 more elements to talk about, labor cost and then fixed production costs. So that was our material cost element. Okay, so that was where we were before. Our next element to talk about is our labor cost. So again, this is just our little heading, underline. Okay, so make it clear this is what we're talking about. And yeah, there's not a lot to say here, because what's happened to labor cost is it was £6 per unit. It's now still £6 per unit under the forecast. So I'm just going to make a note of that the cost per unit is forecast to be unchanged at £6 per unit. This will have no impact on the gross profit margin change. If everything stays the same in terms of cost per unit and sales price per unit, gross profit margin is going to be unchanged. This doesn't have a huge impact, okay? And this is where you can have commercial awareness. Okay, is that we can talk about that. With materials, we said if we're making more stuff, we might be able to negotiate a cheaper price, but it's unlikely that we'll get. So unlikely we can achieve the same economies of scale. Okay, I think that if you go to most workers and say, "Oh, we'd like you to make more stuff, we'll pay you less to do it," most workers will tell you to go away. In fact, it's normally the opposite, isn't it? If we want people to produce more stuff and work for longer hours, we normally have to pay them overtime and stuff like that. So it's unusual that we'd be able to get economies of scale to get people working more hours. Okay, the only thing just to watch out for is that that here we've obviously said, I'm just going to put it in brackets because I think it's quite a high level point that most people wouldn't get, okay, is that here we must be forecasting the same levels of efficiency. Okay, so we're not forecasting people because we're producing more, they're going to be able to do things more quickly, which you might, if you're producing things to, at early stages of production, you're learning how to do things that people are progressively getting quicker, you might forecast a little bit of efficiency so people can produce things more quickly and reduce the cost per product, but we're not forecasting that. So maybe we've been producing for quite some time. So not a huge amount that we can say with labour. Okay, finally, we've got after labour, we've got our fixed production overheads. Okay, and fixed production overheads we can say some stuff about. So fixed production overheads. Now these are sitting at the moment under cost of sales. They are a cost of sale. If we're manufacturing stuff, it's a cost associated with making the stuff that you're selling, so that's fine. Yeah, but what we know here is that the total fixed production overheads of 600,000 are remaining the same. So I'm just going to say here that my total fixed production overhead is forecast to remain constant at, I think we said £600,000, didn't we? Yeah, at £600,000. Then the only thing I would then mention is, however, because we are producing more units, the cost per unit is reducing from, and what's it reduced from? It reduced from a level of £4 down to £2. £4 to just £2. And this will improve the gross margin. Okay, so this will improve gross profit margin. Okay, so again, we said the actual gross profit, the actual fixed overhead, the rent, the rates, the insurance of our business is staying the same. But because we're making more stuff, we can actually share that cost over an increased number of products. Okay, so because we're producing more units, cost per unit is reducing. The only thing I didn't put there is, and I should have done, and I'm going to make a little note here just to say that you should really put this in, is you could say that this is because the same cost is being shared across more units of production. Okay, and then we move on to the last part of the question. Okay, an explanation of what is likely to happen to the current assets position of the business by considering the following. Okay, now I'm going to, and in exactly the same way that I did on Tuesday when we were here, is I went through one of these. And the reason I went through one of them is because they're exactly the same calculations. You're just dealing with trade receivables with one, you're dealing with inventory on the other. So an explanation of what's likely to happen to the current asset position. So current assets we know are inventory and receivables and their cash at bank and stuff like that. So what's going to happen to them if we sell more stuff? Okay, well, my gut feel is if I'm doing more business and I'm selling more things, then my receivables balance is likely to increase. If I'm selling more stuff, I'm probably going to need to have more things in my warehouse to meet the needs of my customers. So my expectation is that things are going to be going up. Okay, so let's have a look at whether that is going to be the case. And they say, well, first of all, look at inventory levels. So if I have a look at inventory. So inventory is going to be the one that I look at. And what do I know about my inventory? Okay, well, inventory is currently 350,000. It's currently 350,000. And inventory is what going to be my stock of all of my finished goods. And my finished goods are going to be based on the total value of my cost of sales. So cost of sales is what's going to give rise. That's 2.25 million pounds worth of cost of sales. So I believe this inventory level is going to go up. Okay, now it does tell me in the question, it gives me a hint, doesn't it? It says inventory levels include a prediction of inventory levels based on the current inventory holding period. So I can work out the current inventory holding period. And my current inventory holding period is going to be based on inventory of 350,000, divide that by cost of sales of 2.25 million, because that tells us, you know, what proportion of my year's costs do I hold in inventory at the end of the year, times that by 365 days, and that gives me 56.78 days. Okay, someone did ask me a question about some of these things kind of just after the lesson finished. If they ask you to round, obviously round to the number of decimal places that they give you. If you're partway through a calculation and there is some rounding in it, I always tend to just leave the number in my calculator. I'm going to use it again, okay, or write down 56.78, and then we're going to be using it in the future. Okay, but that's my forecast, my calculation about, you know, what's going to be happening right now. And the question says, what's going to happen to inventory under, let me do this in a different color, so under the new proposal. So the new proposal says that my cost of sales are now going to be equal to, and the question tells me the cost of sales are now going to be 3.6 million. Okay, so if you're wondering where that number's come from, just go to the question here, 3.6 million cost of sales figure here. Okay, so 3.6 million cost of sales. And we're going to assume that the inventory holding period stays the same at 56.78 days, which means I can now work backwards to say, well, that means that I'm going to have a forecast inventory level of, well, I know that the total cost of sales is 3.6 million. And I know that's for a full year, but the amount of inventory I'm going to have is 56.78 days out of a full year of 365 days worth of inventory. Okay, so I just quickly work that number out. So I've already done that. £560,000. So I can see that my inventory will increase from 350,000 to 560,000. Okay, now I'm happy to say that's an increase. I know earlier I said I like things to be improving or deteriorating. Well, it's an improvement in the total value of assets that I've got. But then some people would argue that having more inventory it is not actually a good thing for our business because we've got to store it and we risk it going off, going bad, becoming obsolete or losing value or being stolen. So, you know, I always think it's marginal whether you know, we say it improves or deteriorates. And the asset value has improved. We've got more staff, we own more staff, it's more valuable, so we're happy from that point of view. But I would be happy there to say that it's an increase. And overall, our current assets are going to increase because of this expansion. People are going to owe us more money because we're doing more business. We're going to have more inventory because we've got to have more stuff in stock. Okay, and as I said on Tuesday, for anyone that wants to, I'm going to leave that last part for you guys to have a look at in terms of the trade receivables parts. I will be back here on Tuesday. As I said right at the beginning, okay, every Tuesday I'm going to go through a question with you. Afterwards, I'm going to email you the video. This will be the video that I send out to everyone with a document going through next week's questions. Okay, so I will see you all next Tuesday. Thank you very much for tuning in. And apologies, the original video didn't go out, but hopefully this covers all of the things that we did cover last Tuesday. Any questions, feel free to tune in next time and put them in the chat then. Okay, have a great weekend and I'll see you later.